What's up guys, your boy Quick Stocks is back. As always, remember to hit those thumbs to recharge my dopamine, and we will get right into your quick stock analysis of Aurora. Ticker symbol ACB, trading for $11.26 as of May 15th, 2020, up over 75% today as of filming this video, and up 90% in the last 2 days alone. I'm sure most people haven't noticed because the hype train around ACB, or Aurora, has kind of died down. I mean, for good reason. Investors in the company have been completely crushed, with share prices trading beneath $1 a share earlier this month. So what in the quick stocks world is going on that could bring share prices to over $11 a share during trading hours today? For transparency's sake, before we get into your quick stock analysis, it's important to note we actually have a small position in ACB, which we made out with a smooth G.5 in profit today. However, I'm still down a few $100s. With this in mind, what's my move? Is this the light ACB needs to get itself rolling again, or is ACB cashed? This is your quick stock analysis. So let's get it out of the way. No, Aurora isn't up 1,000% this week. They actually did a reverse stock split early this week in which they granted shareholders 1 share for every 12 shares an investor held. So before the split, if you had 12 shares worth around 70 cents each, the split left you with 1 share worth current market values, which is now around $11. However, along with this, it's important to note they issued even more stock, diluting shares more than 30%, which Aurora is starting to get known for. Let's be real, Aurora's balance sheet is straight ditchweed, and if you are investing in ACB, I have to assume it's for the long-term potential in the cannabis industry. On the flip side, share prices are up 75% today as of filming this video, and like I said, 90% in the last 2 days. So, why did ACB move so much today? Well, it's because of earnings, and from an outsider perspective, one could think to themselves, wow, they're up 70% today? The company must be crushing it, which really isn't the case. To be fair, taking a look at the upside, ACB reported a revenue of $78 million, which is a 35% increase over the fiscal second quarter. And Aurora increased its production from the prior quarter by 36 million kilograms and had a 34% increase in sales. However, the company still isn't profitable, and the company has a market cap of over $1.5 billion, in which the company continues to dilute shareholders' position by issuing new shares, while top CEOs have been cashing out. Let's be real, the company has had disappointing returns hovering around levels seen in 2016, and many investors are still down 90% on their investment. I know a lot of people still love the company, so I'll quickly paint the bull case scenario. With economic downturns and quarantine restrictions, it wouldn't be a stretch to assume a majority of people's mental and physical health are deteriorating. Let's be honest, a lot of people tend to turn to that sticky icky recreationally and medically when times are rough. On top of that, when times are tough, people are much more aware of prices, and Aurora can produce unbelievably cheap bud. As of this quarter, they announced they have reduced their price of production per gram to almost $1 of some fire, which is crazy after considering the price of water, soil, or medium, anti-pest measurements, power, labor, etc. $1 production grams is huge. That's flushing out the black market. Small indoor growers simply aren't going to be able to match that price, and very unlikely that they're going to be able to match that quality. You have to understand, most black market growers have had the experience growing a few hundred or a few thousand plants. That simply does not allow you to select for the best strain, work with it, and turn it into perfection, because each strain has specific requirements, and it takes a master gardener to reach a plant's full potential, let alone the restrictions put upon by doing it illegally. Also, I don't think a lot of people understand the seasonality of green. From start to finish, it's at least a 100-day process per plant. Starting from a clone saves a few weeks compared to seed, but regardless, it takes 2 to 4 weeks to veg a clone, 1.5 to 2 months for a relatively fast flowering strain, which of course ACB and most other large facilities use. A few weeks to dry, trim, and cure, and of course you still have to sell it. This isn't like once a factory is up, you can start seeing revenue at the snap of your finger. It takes a third of a year before any revenue starts to come in after completing the facility. Granted, you could start bringing in plants mid-flower, but that brings its own issues. Last year, ACB went through such a large ramp up in facilities, there's no way for it not to hurt the bottom line. But this also gives them a huge competitive moat over new companies entering the market. Now that I've painted the bull case scenario, with all of this in mind, I still in good conscience cannot recommend ACB to the average investor. The company does not have a good track record in regards to protecting shareholders. However, I wouldn't be surprised to see another massive run-up in the coming months, and long-term I do see plenty of growth potential in the company. With that in mind, there's no way I'll be selling my shares. But remember, the few $1,000s I have invested in ACB makes up around 1% of my total portfolio. By no means is this a do-or-die move. This is yet another entertainment play on my part. Anyways guys, that's all we got for today. As always, the best investment you can make is to go long on Quake stocks. Hit that subscribe button now at 170 subscribers and plan an early retirement. I'll catch you guys in the next one.